Welcome back to America's Retirement Headquarters, the home of the Retirement Guys formula and America's Medicare Associates with Nolan Baker. 419-794-3030 is the phone number. The website, arhq.com. The clock is ticking on the so-called Trump tax cuts. They're due to expire at the end of 2025. If you want to take advantage of the lower rates now, you can do a Roth conversion. The money does go in after tax, but tax guru Ed Slott tells Morningstar many are skeptical because they think the government will try to tax Roths next. And here's what he had to say about that.
I'm going to give you the secret that Congress doesn't want anybody to know. Don't worry about it. Congress loves Roth IRAs. I mean, loves, addicted, that kind of love. It brings in money. It helps pay for everything else. So luckily for us, they're so short-sighted. Remember, the only money that can get in a Roth is already taxed money. So they look at the Roth IRA as a revenue source. So I don't think they're going to kill their golden goose.
Normally, I'd be wary if someone was talking about a politician and some form of addiction. But when it comes to tax savings, perhaps there's some merit to that. Would you agree? How much of a retirement nest egg should be converted to a Roth prior to the end of 2025? A portion of it, or maybe even all of it?
Yeah, I think Ed Slott actually has some really good advice there. I've, seen him in conferences, read some of his books, listened to his audio tapes. Ed really does traditionally have some good feedback, and I think he's correct in the fact that when somebody takes money from a tax-deferred IRA and they convert it to a Roth IRA, in that year is when taxes are typically due. And we know with most of our politicians, they're concerned about the short-term here and now, and so getting that revenue in, I think what Ed talks about makes a lot of sense on why politicians would like that money now, not thinking about things in the long run. The first thing that I would say is, I'm not a CPA, I'm not an accountant. Before you make any financial changes to your portfolio, it's always important to sit down and run the numbers with your CPA. I know our office, we work with a lot of different CPAs, and when we look at creating a tax roadmap for somebody, getting the CPA involved in the conversation is very beneficial. It gives that opportunity to maybe think about things and get everybody on the same side of the page. That's why we like the kind of the comprehensive approach that we do to have all the key professionals working on the same side. With tax season kind of filing behind us, if you will, now that we're summertime, we're thinking about, okay, even though your tax filing is put away probably for last year, right now is a really good time to do a tax analysis and create a 2024 tax roadmap. With a 2024 tax roadmap, what we can do is we can go through our tax savers checklist. There's 25 different items that we go through when we're looking at the tax roadmap on ideas to share with people on how we're looking to try to minimize the taxes that they pay either this year or sometime in the future. And if you don't have a 2024 tax roadmap, I would encourage you to call the office at 419-794-3030. We'd be happy to do that for you, get a tax analysis. It's really beneficial if you have more than $250,000 saved in a tax-deferred retirement account, especially if you think that the tax rates will be higher in the future. And, with the out of control spending that we have and with the looming tax cuts that are coming, I personally believe that for a lion's share of the majority of Americans, tax rates will be higher in the future. So in many situations, again, not in all situations, but in many situations, converting money to a Roth IRA, either a portion of all of it, is somewhat of a plan that oftentimes happens over a couple of years. I'm going to give you two great ways to do it. But first of all, you want to think about the factors to consider when you're looking at doing a Roth conversion. What you want to do is you want to look at your current tax bracket. So converting money to a Roth IRA is going to be a taxable event. You want to access your current tax bracket, consider like how much income you have to stay in the same bracket, or if you go up to the next bracket, where those income levels are, how much additional income you can handle without pushing yourself maybe into a higher bracket. You want to think about what the future tax rates are going to be, so we kind of know, unless there's some change to the tax law, what the future tax rates are going to be after the current tax laws expire. Take it into consideration things like required minimum distributions. If you're reaching the age where you need to take required minimum distributions, currently at the age of 73, converting to an IRA or a Roth IRA can reduce the RMD amounts because money in a Roth IRA doesn't have to take RMDs. You want to look at the availability to fund to pay the taxes. When you do a conversion from a traditional IRA to a Roth IRA, you usually do have the ability where you could have the taxes withheld from the conversion amount. So again, if somebody converted over, let's just say $10,000, they could have $3,000 held for federal and state taxes, and the remaining $7,000 goes into a Roth IRA. The best bang for the buck, in my opinion, is when you're looking at availability to pay for the taxes, would be to do the conversion, try to get the full $10,000 into the Roth IRA, if that's the right number, and then pay the taxes from personal savings. That way you've got the bigger use of the tax-free money working for you.
Hmm.
Either way, you're going to have less money now because you've paid the taxes now. So you want to then take into consideration the time frame. So it's going to take time for that Roth IRA to grow tax-free. And the longer it can grow tax-free, the more beneficial it's going to be. You also want to kind of think about what investments that you want to own. You might want to own more growth-oriented type investments in your Roth IRA, maybe more conservative income-oriented investments in your traditional retirement accounts, if that's where you're going to pull a lot of your income from. So again, the tax roadmap, what we're going to do is we're going to estimate what your current income is this year. We're going to identify some of the remaining areas that you have within the tax brackets. We're going to look at some tax planning tools. So we have the software to help kind of run the analysis. We'll look at doing, strategic partial conversions. We'll have a conversation with your CPA or accountant, or if you don't have one, we'd be happy to make an introduction or a recommendation to a couple of different accountants that we have in town, and get us all on the same page together to determine, how do you keep the government away from your money? Because I do believe that your retirement account, especially those tax-deferred retirement accounts, could be in the crosshairs of where higher taxes can go in the future. In fact, we're already seeing the government take steps to go back after attacking retirement accounts. And why do I say that? Well, if you look at a couple of the recent job acts, or the couple of the tax laws, I should say, that went into effect, stretch IRAs used to be something that you could stretch out over your lifetime. And then one of the recent acts that came into play, they took it from lifetime down to 10 years. And then in the other recent act that they had, they shortened it down where you have to take distributions now every year and get all the money out within 10 years. So your retirement is in their crosshairs. The government has gotten out of control with money. And if you want to develop a plan to help keep the government away from your money, looking at it and developing a tax roadmap can be great. We'll look at it from a strategic standpoint. The second area that I want to talk about is what is called tactical. And what tactical means is when's the right timing to do a conversion. So from a tactical perspective, I don't know that right now is the best time tactically to convert over equity positions in a portfolio. And the reason I say that is that, the market is right now at record level highs. And so with the market at record level highs, it may be better off to wait until there's a pullback in the market from a tactical perspective. So if you have great stocks that you love and want to own for the long term, and if there's a market sell-off, great companies will probably be worth a little bit less if the market has a sell-off. Doing the conversion at the lower amount gives you the ability to maybe have a big bounce back. And if it's in the Roth IRA, you get the bounce back in the Roth IRA, as long as you follow the rules of what is set up for a Roth IRA. Then all that tax-free growth and that bounce back is also tax-free. So, from a tactical standpoint, maybe not the best time, but from a strategic standpoint, looking at it every year. And again, the best and only way to figure out is to work closely with your accountant, CPA, and have our office put together a 2024 tax roadmap for you.
I've said this before, but it bears repeating. I think we all hope certainly that our retirement accounts will grow over the next, 10, 20, 30 years, however long it's going to be while you're in retirement. And we also pretty much assume that taxes are going to go up in the future. Just at the end of 2025 is going to be a tax increase by itself. So knowing these things, it makes a lot of sense to pay taxes on a lower balance right now, pay lower tax rates on a lower balance now. But it really isn't as simple as just converting everything, from a Roth standpoint right now, because that could be counterintuitive in the long run. Having a methodical approach about it, that tax roadmap run is a great way to start and figure out how to make sure you get to keep as much of your money as possible. Reach out and speak with the team at America's Retirement Headquarters, 419-794-3030. You can also schedule a time as well on the website, arhq.com.